Hello there traders, in this video I'm going to show you how to use the same time frame without having any daily bias for entries. So this is not going to be a trading strategy, but you can use it for entries, following the trend, and minor scalping. So we have three types of patterns that we are going to cover in this video. These are the patterns we have: type 1, type 2, type 3. On the first one, we will cover it on the first section of the video. Going forward, all the timestamps will be in the description below. The time frames that we are going to use in this video is the 5 minutes, 50 minutes, and the 30 minutes. There is no higher time frames here. If you are focusing on the 30 minutes time frame, you focus on that time frame only. No going below or going upwards. Okay, so let's start with the first structure, which is the basic structure. On here, we can see that the market swept their liquidity here with the structure. Let's say right now we are on the 30 minutes time frame. Here you see this kind of structure happening, but the market previously swept this liquidity here. So what you need to do is to focus on this area here. The only thing that you need to do is to find a high, a low, and a new high here so that you can enter the market. So that means you have to find something like this area here, and this section will be something like this. You have to find a new higher high, like a break of structure here, then your demand zone here before you can trade to the upside on this area. Okay, so for now, this is the structure that we have here, and also you have to find the demand zone before you can enter into the market, and you have to find also a break of structure here, the minor break of structure that is inside this area. And this can also be found using only candlesticks pattern without using the whole wave of the structure. So this was a bullish scenario. Let me show you on the bearish one. On the bearish one, you can see that the market was shooting higher, went lower, made the structure, sweep this high, but then suddenly the market reversed to the downside, breaking this previous low here. So when the market returns to the upside like this, you have to find a structure after price has made this high here. So that means you will find a zone around this area. You have to find a break of structure like this, because you can't just find a zone and then try to enter. No, it's not going to work like that. So this one is correct. So you will be looking to trade to the downside using this supply zone here. And you have to remember, sometimes the market does not sweep the liquidity like this. It will shoot higher, make a high here, make a low here, and then shoot higher, but without breaking this structure here. And then start to move lower to the downside, made this here, and then started to drop lower from here. So there are a lot of patterns in this video, so you have to watch till the end so that you can understand all the structures that we are going to cover. So let's move on to example 1 of this type 1 basic structure. We have this structure over here. You can see that the market swept the liquidity to the downside here. We have price trading to the upside. Then we also have a trendline liquidity for those who sold from here, at least benefited to the downside. But those who were thinking that the market will move higher using maybe breakout like this, their profit, they are very slow. And even this move here took them out. Okay, so from here, if you look closely on this side, because we already swept the liquidity, price right now is at this area. The only thing that you need to find out is price was shooting to the downside. You need to find a high, a low, a high again, and then a low before you can enter the market from this area. Okay, so from here we can look at the candlesticks and look closely. From here we can see that price made a new high here, shoot higher, made a new high, and then some few lows here. So let's erase all the inks and then move forward. We can see that right now we have a zone, but which one is the high of this move here, which one is the high here? Let me show you. We have this high here, we have a low, we have a high, we have a high, we have a high, we have some few lows here, but this one is the correct one here. So then you will be predicting that the market will shoot higher after price has confirmed, and we can see that we have a confirmation candle, which is this bullish engulfing candle over here. And then we have another one, which is the retracement candle. This one is a retracement candle from the engulfing candlestick. This one is our confirmation candle here. So then you will enter either on this confirmation candle or wait for the retracement candle, and then you can make your take profit around these areas here, and we can see we still have a fair value gap around this area, even around this area. You can target this level here, this level around this areas here. This will be your take profit level. Okay, right now we have our confirmation candle on the demand zone. Entry candle is this one here. Then you can place your stop loss and targets like this. Stop loss below the demand zone. Entry is either on this engulfing candlestick or on this retracement candlestick, and then you target this high here. So that's how the market will behave, and you can see the reaction on the fair value gap that was created here, which was our target. So let's move on to example 2 of type 1 basic. We can see right now we have this complicated structure here, but let's label it so that it can be clear for everyone. You can see the market swept the liquidity to the upside here, have a change of character here, and then the market started to shoot higher. And we can also see a fair value gap around this area. So that means our zone will be used from this candlestick. Then we will be looking to enter the market around this area here to go short. Okay, and then we can also see that we have our supply zone there, our confirmation candle plus a supply zone, but we are not done. There are still more examples in this area here, because the market was shooting to the downside. We can still find another area here. The market traded below this break of structure, so that means the market will just consolidate before it can shoot lower again. So you can see we have a zone, and then we have a supply zone plus a confirmation candlestick. By confirmation candlestick, I mean that price should come to the zone, close with a bearish candlestick, but this candlestick here must not trade above the supply zone. Okay, so guys, before we move forward, please consider coming to our Telegram channel. We post weekly trade setup, and also subscribe to the channel and like the video. So let's move on to the next type 2 of entries. This one is just a continuation pattern. It's pretty much simple for everybody to understand. We have seen this pattern over and over the internet while you were learning to trade the market. The market is just bullish and bearish, and sometimes you can see that price can trade to the upside but make a new low here, come to the upside and then trade lower. It's because you didn't choose the major higher low, the previous major higher low here. And then sometimes the market can come to the upside, drop lower to this demand zone, shoot higher, come down, and then we will have this one we call it a deep retracement, because the market came very close to the previous higher low. So that means you will be looking to enter at these areas here, and from this areas here, from this area here, you will still find those entries here. You will still find those entries. You will find a minor zone and then a confirmation candlestick. So then on the side, we can also see, on the bearish side, we can also see that the market did not touch our supply zone here. So it just happens, guys. So you don't have to worry. If you miss a trade, just move on to the next one. And sometimes it can come to the middle of a previous leg like this. The market can shoot lower to the downside, come to the upside, but it reverses around these areas here. So it's not necessarily that the market should always retrace deep like this. No, the market doesn't move like this. If you see that the market is moving like this, just know that this market will eventually drop, and very aggressively, because this is a correction. So let's move on. And sometimes this leg here, it can be a retracement of this lower high and lower low. It can be around 0.618, 0. If it is very deep, it will be this one here, and it can also be the 38% of Fibonacci retracement. If you see this one, that means we might be on the fourth wave of a dot wave. So something like this. It will move higher, make the first one, second, move aggressively to the upside, made a third leg, and then on the fourth leg. This happens sometimes when we are on the fourth leg here, and then the market will push to the upside. If you see this one here, that means you might be in the last leg of this wave. So after this impulse like this, you will see a correction in the market before you can see another move to the upside. Sorry for the messy charts here. I just wanted to clear that out. So let's move on to the next example of type 2 continuation on the example 1. We can see over here we have this messy chart here. We don't know what's going on this chart. So let's talk about it. So what I wanted to say is that initially on this area here, the market is still ranging. You can see we don't have a bullish or a bearish movement around this area. The market was just playing around here, and then the bullish volume was fighting with the bearish volume. They were fighting. Price was fighting with each other. The other large funds in the market was trying to push the market to the upside, and the other one was just trying to push the market to the downside. So that is why you see two spikes in the market. But we have to read price action here. The market spiked, but who was pushing the market here? The bearish people here. The bearish volume, if I may say. But if you look closely from this candlestick here, who's stronger now? Is this one? Is the one who had a lot of money. This one, it did not. So this one wins. You have to read also price action. And also another thing from here, you can see that price is also being rejected here. Rejected here. Even here, it's rejected. It tried to push lower, but the bullish was trying to push it to the upside. So don't try to fight the market. It will bully you like this person here. So from here, we can see that we have a high and then a low. But then we have a break of structure. And then we have our demand zone. We have this candlestick. And then we have this confirmation candlestick. So let's mark our chart up so that it can be clear. From here, we can see that we have a confirmation candlestick here, which will be used for our entry. And on this confirmation candlestick, this bullish candlestick must not trade below this zone. If it trades below this zone, that means this trade will be invalidated. And then from here, you can just enter the market from this close, put your stop loss below, and just wait for the market to push to the upside. And then there are still more examples on this section here. You can still find another zone around this area. You can see we have another zone because we are still continuing to the upside. This is a continuation. You can still find another one around this area. You can still find another one in this area. You can see the market was pushing higher. When it reached the previous zones, it just shoot higher. From here, shoot higher again, making only higher highs and higher lows. You can see this is how the market behaves in a continuation market. But is this our higher low? Because we still have a zone around this area. I don't know. I'll give you a chance to go and backtest some of these examples on your own time. So let's move on to the next one, which is example 2 on continuation pattern. From here, this area here, guys, is this one here. You can see we have the market that swept the liquidity to the downside, have a change of character, price broke to the upside, and then returned. And here we can see a slight fair value gap around this area. It's a slight fair value gap. You can also see a bullish candlestick on the demand zone. This is our confirmation candle. And we also need to see bearish candlesticks or stick before a confirmation candle. Okay? And this bearish candlestick is the one that created this demand zone here, this area. And we can also see that the market, once it touched this zone, this candlestick here is your entry candle here. And we can also see that the market, it was shooting higher here, made a new higher high, came down, made another zone, breaking this previous high, came to the zone again, closed with a bullish candlestick, then the market traded to the upside until we can see another demand zone, which is just a continuation. The structure will look something like this. You can see the market was just shooting to the upside, having a series of higher lows around these areas here. This is just your higher lows. The market was just bullish. Okay, this is your entry point. Using only this entry model that I'm showing you here. This is our entry model. If you want to understand more about this, you can come to our Telegram and then text me. I'll explain everything to you easily. Okay, let's move on to another example, which is the type 3 of the entry model. On this section of the video, we're going to talk about manipulation phases. This is where price gets very tricky, because you will see a high being broken, and then you have an internal low that is broken, and then you have a low that is broken too, but prices just keeps messing with your brain. As you can see, this one here, you'll think that the market is still bullish. It shoot lower, and then you buy around this area, shoot higher, but then it destroys you. Then it moves higher, you buy upon maybe breakout, then the market starts to reverse to the downside. It took you out. Or maybe if you were trying to sell on support and resistance around this area, you will sell here, but the market will eventually shoot to the upside and then come back to the zone and then drop lower. This will make you think that your analysis doesn't work. But if you wait for price to give you this entry area here, after price has made so many manipulations, you can still trade here. Like for instance, if price breaks this low here, this low, you just need to find something like this and then enter to the upside and target this previous high here. And you can also see it's the same thing that I'm talking about. This structure here, you have to find it around this area. And sometimes you can see that price can have a zone around this area here. But when price reaches this area here, you still have to find that entry pattern around this area before you can sell to the downside to target this first low and this second one here, targeted lows. Okay, so let's move on to the first example on this type 3 manipulation. We can see that we have a trend like this. You try to sell around here, this area here, then the market shoot lower. It breaks to the downside, and then you made good profit. But what about those who were thinking that the market will just come down, shoot high, make this high, and then they will buy around here? I don't know how they are going to enter from these areas, but then the market trade below their analysis, and then they get stopped out, and then the market will shoot higher. Someone will try to sell prior to this targeted high here, thinking that this is a resistance level around this area. Then the market will just shoot high, breaking this person's portfolio. So from here, because we have the first targeted high, we have the targeted low, what you need to do is to find your entry model, because the market has already done its messy things here. You already know that you have your targeted high, targeted low. So what you need to do right now is to find your entry area here. And this is your confirmation candlestick here around this. So the market will just eventually shoot lower. So you don't have to play with the market. The market will bully you every day. So let's move on to example 2. This is the same structure again. We have targeted high number 1. Let's see. We have this low, we have this high, and then the market targeted this low. We have the targeted low, we have this high here again. This is your targeted high, have 1, 2. The market has done so many things. And you can also see this structure here. After price has broken this low, you can still enter around this area to target this high here, because we have this demand, we have this supply zone here, and then we have this confirmation candle. Would you enter or wait? I don't know. Let's see what happened. You can see that the market shoot low. But what if you have missed this entry here? Would you still buy if you have a lower risk entries around this area? Because we can still see some setups here. Let me show you 2 that I see for now. You can see the market broke this low, shoot lower, came to this and made this confirmation candlestick around this area. This one, you just place it like this. This is your entry, stop loss, target this low here. This is like 1:8 RR, okay? And then we have this 1, 2. Also, you can target this low. This is like 1:4, something like that. And you just profit because you are targeting this highs here, this highs and lows here, okay? So let's move on to the last example of the video. This one is pretty much easy to understand because so far you have gained a lot of information. So let's look at it properly. We have a ranging market around this area. Price swept the liquidity, shoot high, shoot high, shoot high. Then price came down to sweep this low here, enter the fair value gap, enter this demand zone, and then made a confirmation candle. Because we are still not sure if price will still shoot to the upside like this, we will wait, because right now we have this confirmation candle. We can still enter and put our stop loss here. But if this trade is too risky to enter here, you can still wait. And we can see we have this minor high and low, a demand zone here. This candlestick here created the zone with this one. And then we have this bearish candlestick before a confirmation candle. And then we have this bullish candle close. You can enter here, stop loss around this area, entry, and then wait for the market to shoot to the upside. Then you can still also see that we still have another entry here with a confirmation candle, just shoot to the upside. Because right now here, you can say this one here is just your continuation pattern. Even this one is your continuation pattern. This one is your manipulation. Okay, there are a lot of entries around this area. We can still see this one. This one is also a continuation pattern. You need to enter at the right places. If the market right now, let's say the market is doing something like this, it's playing around like this, would you buy if the market come to this area, if it was tested the first time and the second time around this area without any valid confirmation that the market might reverse to the upside? No, don't do that, because the market will just bully you. Okay, you just need to wait for any confirmations here around this area. If you are in this area, if the market is not going to the upside, it will just show you that no, we are going to the downside right now. You missed me at the top because it want to target something else. Okay, I guess this is the end of our video. I'll see you on the next one. Please consider subscribing and come to the Telegram channel because it's free. I'll see you on the next one. I hope this video was very helpful for you guys. Please go and backtest. And if you want this PDF from this video, you will find it in the description below where you will see PDFs. Okay, I'll see you on Telegram if you need me anytime. So see you on the next one.